Hello lovely people, how are you all doing out there? I have got my weekly property news update for you. I'm Kate Hill and I'm here to give you the best, honest and unbiased hints and tips and news from the property markets, so stay tuned. So just quickly, before we get started, if you are interested in what is happening specifically with our Sydney and Melbourne property markets, then you need to watch these videos right here. Today, I'm going to cover off on housing affordability declining, sales in brand new homes increase, vacancy rate update, and another rise in consumer sentiment. Rising house prices in many regional centres means housing affordability has declined more in regional Australia than in capital cities. This is according to the Housing Industry Association Affordability Index. An HIA economist says that the regional index fell 3.7% in the last quarter to return to the level it was in December 2019. Now, this index is calculated quarterly for all capital cities and regional areas and takes into account dwelling prices, interest rates and wages. So with the onset of COVID-19, consumer preferences have shifted towards detached housing in regional areas, they have said. Migration data shows more Australians left the capital cities in each of the first 3 quarters of 2020 than at any other time since records began in 2001. I've reported on this before. And because of this shift in population, house prices in regional areas outperformed the capital cities over the past year. Among the cities, Darwin experienced the sharpest decline in affordability during the quarter, which is followed by Brisbane and Adelaide. An HIA report also shows that sales of brand new homes in the 3 months to February topped last year by 60%, as the federal government's home builder program boosted demand for detached housing. This new HIA new home sales report, which is a monthly survey of the largest volume of home builders in the 5 largest states, is a leading indicator of future home construction. The report says that home builder was the catalyst for improving consumer confidence in the housing market. A surge in sales was observed following the announcement of home builder back in June 2020, which led to strong sales through to the end of 2020. In December 2020, there was a near record volume of new home sales as households rushed to finalise contracts to build a new home before the end of that $25,000 grant, they have said. The full impact of the extension of the home builder grant at a value of $15,000 will really not be observed until the end of March. The strongest surge in new home sales occurred in South Australia, which is up 150%, followed by Victoria up 69% and Queensland up 60%. Australia's largest residential developer, Stockland, is also seeing a lasting home sales surge that should push well beyond the end of the government stimulus packages. This lift in new home sales in February, driven by an annual increase of 2.4% across Victoria, New South Wales, Queensland and WA, shows the industry has shrugged off the virus crisis. The key drivers supporting demand, they have said, are a shift in consumer preferences to lower density living, limited land availability and ready access to cheap finance. Stockland says that these factors should offset the impact of reduced net overseas migration. Australia's vacancy rates remain below 1% in 5 of the 8 capital cities and are 1.5% in Brisbane, according to the monthly report from SQM Research. Above average vacancies in Sydney and Melbourne mean that the national vacancy rate remained at 2%. SQM Research says that vacancies edged higher to 4.5% in Melbourne, which remains weighed down by an underwhelming demand for rental accommodation. Sydney's vacancy rate rose 0.1% to 3.3%. Elsewhere in Perth, Adelaide, Canberra, Darwin and Hobart, the vacancy rate is below 1%. Brisbane's vacancy rate also remained tight, as I've said, down to 1.5% in February because it was 1.7% in January. So, as well as it being a seller's market, as we have reported, SQM say it's also very much a landlord's market, especially in more regional Australia. We are still recording strong interest, they say, from tenants in larger properties in outer suburban locations as well as wider regional Australia. Investment property owners in Darwin and Perth have also enjoyed a strong year of rental returns. And all of this, of course, is driven by consumer sentiment. The Westpac Melbourne Institute Index of Consumer Sentiment increased 2.6% in March, with that index now just 0.2 points below the December level, which was a 10-year high. The main factors driving the index are improving economic prospects, Australia's success in containing the virus, the promise of vaccines bringing an end to the pandemic, and stimulatory government policies. The time to buy a dwelling index slipped by 3.6%, a fourth consecutive fall to be down 11.9% from the peak in November. We found this index to be very closely linked to affordability in the past, the report has said. The decline suggests resurgent prices are already starting to curb buyer interest. On the other hand, the house price expectations index increased 3.1% in March to a new 7-year high, 12.5% above its pre-pandemic level. The index is a lead indicator of confidence of investors as well, whose presence in the early stages of the housing boom has been overshadowed by owner-occupiers. Again, as we've reported quite frequently in the past few weeks. House price expectations are particularly buoyant in New South Wales, Queensland and WA. Now, as always, people, we will keep you posted on all things property from around Australia as our year progresses. I'm giving you the best commentary and content here on our channel, so please, end of video, beg, let me just ask you to hit that subscribe button, click the notification bell so that you get all those expert hints and tips around buying, owning and investing in property as soon as I post them up. If you're enjoying the content, please click the like button too. I do really, really appreciate your support, and I will see you again really soon. Bye.